G'day traders, Stacey Burke from Stacey Burke Trading, and today talking about crypto and Bitcoin. I've been tracking crypto and Bitcoin the last few months and just applying my basic setups to that market. And again, crypto had that vertical aggressive ascent into the highs, hitting around the $60,000 mark US. And recently a massive sell-off. And a lot of traders have been emailing me, asking me to cover crypto, what I see with crypto. I'm going to go over my approach today and just looking at how that applies and how I see that there are institutional involvement in the crypto markets. We've had a big sell-off in the last 3 weeks, and I think there's going to be some huge moves potentially coming in the next few weeks, which are going to give us excellent opportunities for traders in either direction. But we're going to just take a look at the basic setups today, take a look at how I approach the markets and what I'm looking for each and every session each day, if indeed there is an opportunity and where I see that headed in the next little while for myself. Before we do that, if you could just take 1 second and hit the like button for me. And if you haven't subscribed, subscribe. Turn on your notifications. That way YouTube will update you when I have a new video coming out. So thank you for doing that. Let's take a look. Bitcoin and crypto, are they about to break? Now, just looking at my basic model that I approach the market with each and every day. If you followed me in the past, you know that I apply basic weekly template, 3-day setup on a lot of the major pairs. I predominantly only trade gold. I look for the high and low of the day or session for my opportunities. And again, the bigger asymmetrical risk-reward trade setups can come in this 3-day cycle, the weekly highs, weekly lows, where we'll get a move at the high of the day to the low of the week, or again, the high of the week to the low of the day, the high of the week to the low of the week. As the week expands in its range, and what I have found is that crypto and Bitcoin, Ethereum, they are no different. And we're going to look at those charts. We're going to see how I apply this and how potentially there may be some huge opportunities coming for traders. Now, again, this is just my approach to the markets, and I think that you'll get some value out of this. Most importantly, the thing to understand is that I am not looking to try and catch little moves in the market in either direction. I'm looking for the market to set up the structure where they trap volume down low or up top and then shift the market, and with confidence knowing that I can position myself that their work on that end of the market for that session or that day is done. They've locked it in and they're going to go back and aggressively stop hunt the money, and I can participate in that fast, aggressive, or strong momentum move in one direction. My timing window specifically is 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m. New York Eastern Standard Time. Obviously, there's a little caveat in there with people who followed me the hour prior. And New York and London can offer me some great opportunities. Oops, that's a 7. For if I'm at the high or low of the day or week, meaning that if they go outside in that pre-market hour, that pre-12 candle window hour. When I say 12 candles, I'm referring to 15-minute charts. And again, time frame for trading is not what I'm looking at. I'm looking for the levels to be established. Now, I'm not going to go too far in depth today in terms of levels of rise and fall, but we'll just look at the basic setups on Bitcoin and Ethereum. And again, pointing out major round numbers to me. These are areas where institutions will likely look to participate with big orders or areas to enter or exit the market. Engulfments and pin hammers can signify where those institutional orders are starting to come into the market, or where they may be flipping the book, or if they're going to stop hunt against a trend and then participate in a measured move in that same direction. I'm looking typically at a 1 ATR or a 1 bar stop, depending on the range. an asymmetrical risk reward. I want to be targeting 3, 5, maybe 10 to 1 or greater if we're catching a move not only at the weekly or daily high or low, but potentially even at the beginning of a monthly cycle. And we'll look at those examples again on Bitcoin and Ethereum. The thing to remember with all of this is just my approach. It's general advice. I'm not telling you that there's a trade setup, but I know that there's going to be some big opportunities coming, and traders may get the chance to participate in some of those moves. Now, the biggest thing I would look for in any instrument is, does it move? And obviously with Bitcoin, we've had tremendous movement. We're looking at a weekly chart. And the number one thing for me is not whether or not it's going to 500,000 or that Elon Musk or Donald Trump are tweeting about it or anything else. I want to know, is it moving and is it tradable? So when we look at an instrument, if it's tradable, you've got to be obviously aware of the spreads, the time that it moves. Some of these pairs, they trade on the weekends, depending on your broker. I use Pepperstone, and they allow trading on the weekend on these pairs. Depending on where you're at, you want to obviously be using a regulated broker. If you're in the general retail public and you're only in the long-only direction, well, you're kind of looking at having to hold on to this currently. Now, we had a breakout of a rectangular base, and we'll just try to tighten this up. We had a rectangular base breakout for the big run-up into the beginning of the year. And if we bring this up onto the daily chart, we can see that the market peaked out again in that $64,000 area. Again, we'll just get more specific in a second, but we see the peak formation break again in that new monthly cycle. Then we head into the May month where the market gives us, we had our first red month, and the market rolled up underneath. Again, I'm just not going to go into too much detail about that, but just looking at the peak formation and then the rollover, and just looking on the daily chart, if we do see a measured move of this market heading lower, we'll just tighten this up. Just put a range expansion tool on here. I'm not using fibs or anything else, just looking at 100% expansions of that range. This market potentially, as we see, could be headed maybe down into this 2750 area, 25,750, and maybe all the way back down to the base breakout that we saw at that 16,000. We'll just mark this on here, 14,000. Looking at around 14,360. Now, and again, this is not a prediction or anything else. Just looking at the normal geometrical structure and the breakout. But we're talking about how the day-to-day operation of this market may be trading, and whether or not there's institutional involvements. So if we put on our numbers and our timing window, we can see that we'll scroll back, can look at our Mondays, we'll bring up our weekly. The main thing that I'm looking for on these markets, again, is to be in one of the timing windows of the three major regions when I know that the markets are going to be moving, to be either buying low or selling high, depending on where I'm at now. Luckily, I'm in Perth, West Australia. I can trade all three time frames if I want to. I don't often do that. But again, just looking at where we've come off of that 39,000 level. You can see the market traded up into it and came down. Now we'll look at specifically this week. Yesterday, Monday. So Monday, again, coming back. We won't go too much into the weekly template, but we'll just scrunch this up. We opened up inside of the previous week's high and low. Now, if we just roll this back, we had the peak formation, high, peak formation, low. Then we head into this week. And so Monday opens up inside. They make a high, they make a low in Asia. The market then comes back into the U.S. window, trading up into the high, giving us our engulfment at the high of the day. And again, just big tune in here. 50. You'll notice that the peak formations form above 50 on both occasions. And the low of that session in the London session, so again, for those of you who haven't been following me, blue is Asia, the pink is the Europe-London window, and the yellow is the New York window. you'll notice that all the volume is trapped between 0 and 50. Now, obviously, price has gone above 50, but they've locked in price. The volume has been trapped in 50. We have our low of the beginning of that 24-hour market starting down below the quarter level, below 50. But they have the bulk of that volume trapped up high. And this is something to pay attention to as the day evolves. Where's the volume getting trapped? They lock in the high in the U.S. session with an engulfment. The pin is the evidence of the stop hunt into the high of the day before dropping down, consolidating at the double zeros, and dropping down and rolling over into the New York close. So again, major round numbers, 50s and double zeros. In the timing windows, the market makes a high, it makes a low, it pulls back inside, goes into consolidation, and then headed into the next session, hits the stops before locking it in and shifting the market away. We head into today's session. I'll just move this out of the way. And again, the market, we'll just scrunch this back up. We have our low from the previous week. The market triggers that low. So again, another concept to grasp a hold of is other time frame traders now being involved in the market. We've got people trading this breakout of a weekly low. Asia has dropped down below the double zeros and rolled over. We've gone down through another double zero box and currently pinned down into 50. So major round numbers, high and low of the day. Again, I would not be counter-trending this market at this present time. We've broken weekly levels. We've been continuing to move lower. Now, the market still may give a reversal trade opportunity, but I would not be looking to trade against that major trend with any particular risk. But just coming back to the basic concepts, again, I'm looking for an opportunity to be selling high at the high of the day with the existing trend, or for a buy low setup when I know they've locked that in potentially with 3 pushes. Even if it was into this long market, I would want to see evidence of a 3 push, reversal, double bottom, some sort of pattern in the timing window, but again, looking to take money off the table, taking profits, locking that in. So at the bottom, you'll notice stop loss and targeting profit. So I'm taking something off the table. If I'm trading short right now, I'd be looking to possibly leave something in there, but I'd still be taking money off the table. The timing window is where I'm going to see those markets move. That's where we're going to have the equity markets opening. We're going to see other institutional players coming into the market, but the engulfments and pin hammers are evidence to me of where they're done doing their business. They're either locking it in or stop hunting into a peak formation for a continuation of that trend. So something we haven't talked about is the initial balance, where Monday, Tuesday can, in a large majority of the cases, form the high-low extreme for the week for the boundaries. So we may, I'm not going to go again too far in depth into that. I'm just covering the basic concepts, high and low of the day, the timing window, the major round numbers, engulfments, pin hammers, and looking to be selling high or buying low in those windows when the evidence is there, as we saw yesterday. And again, similar targeting asymmetrical risk reward. Now, this is a trending trade setup, but even if we just target a range expansion, this is a 50 pip box. So 2 times that box gives me a 150 pip target in a trending market. So if we take a look at Ethereum, we can see a similar aggressive move vertically in that market on the weekly chart. We see a breakout of the base, and coming into the new year, obviously that market moved quite strongly and went vertical, similar to Bitcoin. We go to our daily chart. We can see that market again, just bring this over, vertical move, but then we see the reversal setup from the peak in May and then the hard drop straight down. Now, again, just coming back to some simple concepts, I like to look at the monthly cycle. You can see the beginnings of the month. Obviously, there may be institutional books rolling their books, closing their books, locking in profits, begin the month with a new modus operandi. But when we go down to our 15-minute chart and just put on again some number levels and timing windows, we can go back and scroll back as far as we want. You can you can test this out yourself. Again, this is just my approach. This is general advice in what I see. Point I'm making here is that the fact that we see these markets moving in these timing windows off of major round numbers in weekly cycles is evidence to me that there is large institutional players. Well, we're already aware that there are bigger players entering into the market, whereas the general retail public is looking at buy and hold, and the same story applies as it always applies, is their mentality is that it's different this time, and it might be. But as we know, with any instrument where money can be made, we know that there are still, you could be buying high in a market that is about to go down. And so now you're caught holding on to an instrument that is potentially gone into negative value from where you've initially entered the market. The question is how long will the market, Alan Greenspan, I believe, said markets will remain irrational longer than you can remain solvent. So always manage your downside. So if we look at Ethereum Monday, again, just looking back at the previous week's highs and lows, Ethereum opened up inside of those levels, and on Monday, so again the pink bar is Monday. We'll just draw out the previous week's highs and lows. Just make sure we've got this right. And we see the previous week's low is down there. We see Monday opened up. So the thing to highlight here is that regardless of what anybody sees or says, or hindsight, it's going here, predicting, my approach is this. I know every single day there's going to be a high and a low. I know every single day we're going to be trading off of numbers. That's how price action works. The markets are moving from number to number. We know that institutional parcels will be placed in a large majority of cases at or around major round numbers, 50s and double zeros. I've had people ask me, what do I mean by that? Well, look at your price chart, and I can only say to you, look at your chart and tell me what the price is. 50-cent levels, $50 levels, $500 levels, double zeros, thousands, hundreds, whatever that is, wherever the round numbers are, major round numbers, whether that's psychological, institutional, doesn't matter. That's where I'm looking for behavior to take place, but I let the market evolve and create the structure for me. Asia, London put a high of the day in place just below double zeros. They lock in again, evidence of, you'll notice the bodies, the wicks come down below 50, but we have volume trapped in a 50-pip box. So again, start to pay attention to where you see volume trapped. Remember that the market, in order for the money to be shifted from the many to the few, and in order for them to, whatever their game plan is for that particular day, session, week, month, they need to get somebody else to take the other side of their trade. And in order to do that, they need to accumulate volume. And so when we see boxes of volume, to me, that just gives me the red light right away to start paying attention. But we get a new high of the day placed before heading into the U.S. session. We get our little bullpen reversal, 1, 2, 3, hitting the high, and then the 3-bar engulfment just prior to the equity open at the New York Open. And then, boom, the market drops all the way down. And as we head into today's Asian session, again, the same similar pattern. We trade through the previous day's low, as evidenced by the blue dotted line. They pull back into the Asian Open and roll over to go vertical for over 100 pips straight down. So my approach to Bitcoin would be no different than it is to gold or the pound or the euro. I look for the high and low to be put in place. I let the market set up structure. And the bigger picture, if I can emphasize something, the bigger picture creates a bigger box of potentially trapped volume. If this is going to be a sell-high scenario, I'm looking at this whole box potentially, especially on a Monday, Tuesday, where we could be putting in a peak formation high, peak formation low for the week before they consolidate it and then make a major move towards the end of the week. This, to me, is an opportunity for asymmetrical risk-reward. So is Bitcoin about to crash? I think we're already in a strongly downward-moving market. How far? Who knows? We've obviously experienced that before. This could be a correction in a larger super cycle. I don't know, but I do know this. Day to day, There's opportunities. This market is moving. You just need to be aware, obviously, of the broker you're using, how the spreads fluctuate, what your margin is. You don't want to be in a situation where you're over leveraged or anything else. Manage your downside. Again, this is just general advice, but the timing window, the high and low of the day, the engulfments, pin hammers, asymmetrical risk reward, tight stops. Keep it simple, traders. Hopefully you got value out of today's video. A lot of people have been asking me because of all the media coverage, everything that's going on with the huge moves. I think we're going to see some opportunities, and again, both directions. So keep it simple. Again, thank you for hitting the like button, and keep it simple, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.